Legal notices, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Hi, good evening, guys. It's Simon with Trade and Perform Coaching, doing the market preview, trade review. It's Sunday evening. I guess my head's not quite all there. But we're doing the trade review for Friday, the 9th of June. And it was a pretty incredible day. Obviously, anyone who took a look, the market's roll to the downside was really, really hard. We had range expansion. We had an open gap. We had what appeared to be open drive higher that turned into failed range extension, that turned into gap fill, that turned into market breakdown. Really, it's one of those days as a trader where if you couldn't keep your mind together and you didn't understand the process before you entered, right? These shifts in the market can be seismic. They can be confusing. They can cause a lot of damage to a trader's account. So before I go into the day, I want to say something that's really, really important to all traders. My number one objective when I start the day is to protect my capital, to come back and trade another day, right? Because you never know on any given day what the market's going to do. The focus when I come in on the day is to look for the specific setups that the market's offering me at usually at predetermined locations from my homework, right? And if those locations fail me for any reason, or I recognize because I know what looks normal on most days, which makes it very easy for me, I have a process, right? And I have a entry exit method. And I have a maximum stop loss on the day, and I have a maximum stop loss on the week, right? And because of that, first of all, I don't worry about my account because I know I'm not going to violate that. I trust myself to follow my process. Really, really important. Secondly, I'm not going to overtrade it. I already know that coming into the day. And the third part is I'm not into market predictions, right? What I do is I pre-locate areas where I think the market will have challenges either getting above or below. And then I look for specific type of price action to determine my exact entry exit. And if I'm wrong, I have a specific stop. And if that stop gets elected 2 times back to back and I take 2 full stops, my day is done right there. I don't question anything else about the market. I don't have a desire to make the money back. And that's because I know for a fact, based on my own research, my historical data, and my trading patterns, that I usually can recover that 2 stops back to back within a day or two and go on to new profits, right? I also know from coaching people for a long time that what happens is when people panic when they get down, if they don't anticipate that there'll be down days, they don't accept that there'll be down days, that's where the overclicking begins, the overtrading begins, the violation of stop loss maximums, and large drawdowns in the account. So the number one thing I would encourage you to do is, number one, have a written trade plan. Have a process where you know there's an edge. Number 2, trust that process, right? The more you violate that process, the less you'll be able to trust yourself. 3, have a method for calming your mind down. I meditate every morning and evening. I post almost every meditation session online so that you keep your mind calm. And even if you can't identify quite what's changed, you can identify what's gone wrong. So I want to start the day off here and with first of all what the trade plan was. This is the, so let's just jump into it, right? This is the white zone. The white zone is important because for me it determines that buyers are generally in control above, and their sellers are in control below. And the white zone has no special place. There's no technical chart that'll tell you where the white zone should go. It's based on my years of experience on where support and key support resistance levels are, right? So when we come into the day, right, it's easy to look at the day afterwards and go, oh, well, it's clear that the market rolled over. So let me give you some clues about what was strange about the day to start off. First of all, we did gap up and we failed. So let's come in from the get-go, right? First of all, we already knew before we started the day that 3032 was my key location for the day, right? Number two, we gapped up. That created an opening print at 24.34 1/4. So that told me two things. First of all, in order for me to be generally thinking the market might go down, I'm going to have to get underneath and hold underneath that opening print. And then because of that opening's print location of the white zone, I'm going to have to get into the white zone, fail to get back above the 24.34, and then I'm going to have to push below that white zone. And if I push below that white zone, that's going to put on my, hey, we're a little bearish. Right? And there's a couple of reasons why I thought we could be a little bearish. If you look at ES volume profile, we'll start with, and I use both volume profile and TPO. If you start off with this day here, what you'll notice is, okay, so this is Thursday, right? So if you follow the lead, value shifted higher. So we started off on, we went from trend day up, right? Where we left a very poorly auctioned profile, right? The only place that we had any kind of reasonable high volume node was right here, and that got taken out 4 days later, which meant for me, in the way I trade, this high volume node no longer exists, and that's based on rules from mind over market, right, in the auction market process. Okay, so I'm going slowly so everyone can understand. This was a key support area, right, to hold above. Once we took it out over here, for me, in the way I trade, this support level no longer existed, right? Value shifted higher for 2 days in a row, then we shifted lower. And what was key to moving to the upside was getting value to shift lower and then opening above that value and holding above value. And you see we accomplished that on Thursday, right? And so my note in my the note to the members in the room was if we could get above 24.37, 24.34, 24.30, generally back here, the original note was if we get above this 24.37, we could really drive higher. Again, I didn't post that publicly, but I did post it on the Twitter stream. I believe I have it right here, and I'll show. So what you can see here from the private Twitter stream is back on the 7th, I wrote, hey, if we consolidate above the 24.37-ish area, right, that could lead to a nice upside extension, right? And that was based on my read back on the 7th, which was here, which said we really needed to get above this key. So remember when I wrote that, we hadn't rolled over on futures yet. So if you add 2 points, all of these are 2 points higher, which meant this 33 would have been sitting up here at 35.25. And really, I was using this as my support resistance. And I said, look, if we can just consolidate up in this area, we could really push. Well, this is a 24-hour chart, right? So if you look, this is where we left off on the 24-hour. This is where we left off on the day time frame, which again, I use multiple time frames and multiple types of charts to determine support and resistance. But when I wrote that, this was the 7th. This was that 24.35, 24.37 area. And I said if we can get above it, remember, you got to add 2.25 for the June contract, right? We're now on September. If we could get above this area, we could really drive, right? So if you look at how the day, that day proceeded and how we opened up, right? What did we do? Sure enough, if you had 2 points, we opened up at essentially 24.36. Backside tested that 36, 37-ish area, and we drove up. So immediately in the room, and you're going to see because right before I post this, I will post the market preview so you can kind of see it before and after. Before the market started up and after the market started up, so you can see how we laid out the day. I thought it was such an important day. It was really a key way to learn. And I understand this takes a little bit more time, but it was such an important day to learn from because of the way that the face of the market changed so dramatically, right? So we open up, we hold the opening print, we hold what's essentially the old 36, 37 area, which is now the 34, 35, consolidate there for 15 minutes, fail to fill half gap, fail to fill the gap. We're above the white zone and we're above Thursday's volume point of control. All of that is very bullish, and the tick is all positive in the morning. Tick this shows what the broader market is doing, and we stayed all positive. This was where I mentioned in the room where aggressive longs want to get long, the most aggressive longs, and then those that are not as aggressive, obviously we're all trading futures, so we're all aggressive to one degree. It's just to what degree, right? And then if not, this was my key location, and you'll see if you watch that market preview, I identified. I said, this is the area, specifically 2 ticks in front of 24.30.75, so 24.31 and a quarter. This is where my best long position is for the day, and you can see we did not get that in the morning. We open drive higher. There's no reason to short. Now I want to show you, and I'm going to shift quickly because there's a couple things I want to cover here. When we get to the high of the day, this is 10 up. That's a natural rotation and somewhat of a range extension for the first hour, hour and a half. We haven't been able to achieve 10 points, right? And then we get to the first hour high, right? And we start dancing around this first hour high. Now, that's not unusual. On a trend day up, the first thing you don't want to see, if you're looking for a continuation higher, is you don't want to see a 50-60 retrace. We're both above the 24.37 at that point is the all-time high. The adjusted 24.37, that's the old 24.39.75, essentially the old 24.39.75, 24.40 area, right? So you don't want to see it back. Secondly, and really key to remember, weird things happen on futures rollover. And I'm going to show you what I mean by that. I'm just going to pull a fresh chart. And if you go back and look at futures rollovers, we had some weird pricing action last time. And what I used for an example for that was at NQ. And forget what happened on Friday, right? We already had a good example that things might be a little weird based on the open Thursday into the close, right? We essentially ended up with, and some really interesting things happened here as well. We essentially ended up with a gap, but a failure to hold above the high, unlike what ES did. NQ has essentially an open drive lower, but a failure to break prior day's low. So it's not bearish. You got to get below the prior day's low, but this is also not bullish, right? And then at the end of the day, you can see they tried to force it for a pushback to a test of the low. That failed, and when that failed, shorts had to squeeze. I attribute almost this entire move to futures rollover. This is a hedge fund coming out on one end, was my guess, and hedge fund coming in on the other end and just covering that trade. And you can see we've been in balance for multiple days, right? What changed here is what you'll notice is when we're at the high, so this is, I want to show you something. Here's the high for NQ at 925. So a couple of interesting things. First of all, we've barely broken the old high. We have gotten above the high, but at 925, that's NQ high. And didn't mean to do that. Same time frame on ES. And we're hitting a new high for the day, but ES continues higher, right? Then the other thing I noticed is that we have an inability through this entire push up to hit positive 600. We usually, if you watch the market long enough, you'll recognize certain identifiers. The first thing is usually when we have a trend day up and we open really strong, the tick, NYSE tick, will open up at plus 800, right? So that was a little interesting that we couldn't get a strong tick, and nor could we continue with a strong tick. And then the killer here was we pushed to a new high tick on the day without pushing to a new high price. And then again, we pushed right to the high of the day, again, matching the high tick and failure to get new high price. And I mentioned this right here when we failed the second time. So we established a first hour high, right, but failed to close above it. We closed above it once, trapped back in. Then we really did close above that first hour high right here. See this? We actually closed above that first hour high. through my mouse there, apologies. We actually managed to close above that first hour high right here, and then we closed back in. And the first thing I said, so I want to take you to that time frame, right? This close back in right here takes us to 10:30 in the morning, right? And I want to show you what NQ is doing at this point. Now, normally there's not a direct correlation. There's a simulation there's usually, if you look back in the history between NQ and ES, there's a balance between the two. They usually don't go off in separate directions, but they have as of late. It's been very hard to get a steady bead and have them both trade in the same direction. Now, I want to show you that same 10:30 time frame as we roll over and we come towards London close, right? So here's 10:30. Here's the London close, right? And here's where we are at that same time frame on ES, 10:30 a.m. Just still above the prior all-time high, right? Still holding above 10 up. Really just balancing, no negative tick. Okay, so when I'm coaching people, what I tell them to look for, right? So we essentially have these two charts. And what I tell people to look for, this is the picture that we had at this time of the day, right? There's that 10:30 mark. This was NQ's low of the day, right? And so there's a couple of really interesting things going on here. First, you're going to notice NQ filled the gap right out of the gate when ES didn't. So the first thing I thought was, well, potential rotation out of NQ into ES, right? The next thing that I noted when we were up here is normally I would be looking for a long on negative ticks or negative pushes down in this environment for continue on to trend day down. That's just part of my playbook. Not trend day down, trend day up. We haven't come back to the 50 retrace. We barely get any rotation down. That is classic behavior for trend day up, right? So when we're, make sure everyone sees this. So when we're right over here, literally on this bar right here, I said, guys, there is a problem. This is the day's low. Said in all my years of trading, I have never seen ES trend day up and NQ trend day down, or even break the low of the day. And so I'd love to tell you that I turned around and shorted. What I said was, this is a very aggressive short, and this is being made primarily for the members in my room, right? So the general public can see it, and if you can learn from it, that's great. But my concern is for my guys in the room to understand. I said, this is a very aggressive short. You want your stop 1 point above the high if you choose to take it. It's a backside test. It's a grade A trap against IB high. And I said, if you're very, very aggressive, I said, tick is really not behaving correctly. But more importantly, look at this on NQ. Something's really dramatically wrong. And what I said was, I didn't short, but the other key, and I can't show this, but I said to the members in the room, look at the dome on ES. Now normally, so this is the trading dome in ES, okay? And normally that dome will have sizes in it, right? And normally what you would see in a healthy market is 1,000 to 1,800. 1,800 would be pretty heavy, 700 would be pretty light. And you know, when you're closer to the bid ask, you'll see 800 to 1,000 or 1,200 on the actual closer bid, and then as you go a few levels up or a few levels down, you'll see deeper and thicker bids. And I'm like, look guys, all the bids are really thin, so it is futures contract rollover, but I said, we're actually showing less than 100 contracts at certain points in the dome, and this is still, while we're all the way up here, this is, and I said to him, I said, I've traded for a long time, and it doesn't always translate into something bad, but I've seen bad things happen to me when the environment's like that. I said something's wrong with NQ, and if you learn nothing else from Friday, ES trend day up, NQ hitting new lows on the day, right? Something's wrong, and be in a mode, number one, to protect your capital, right? If you don't, and I said, I don't understand what's going on. I don't understand why NQ is breaking below the low of the day, but I do know this. I'm not putting on, normally I would put a long on either right here or right here. I said, I'm not putting a long on because I don't understand the price action. And I said, I'd be cautious at the 50-60. It would indicate that we're no longer trending and that we're either going to move to balance, right? Or we're going to break down, one of the two. And then as you see here, so then I want to show you this breakdown, right? As we're rolling along. This is 11:30, right? I want to show you this time frame as you're looking. Right, so we're pushing 11:20 right there. I want to roll this over into the 50 retrace, right? So we keep this going towards. So if you look at this point, we're at 11:20 over here. This is 11:20 on ES. It's just pushing to the day's 50-60 retrace, right? You have to be able to look at these two charts, right, and go, hey, something's really, really wrong. Now, what I tweeted at this time on the private Twitter account, and I'm going to go find it because I put it out there. Let's see if I can grab this. And I put this out on June 9th. I wonder if it'll show the time. Let's see. June 9th, 9:16 a.m., but that's California time. I'm on Central time. So I'd love to say that I identified it at 9:16 a.m. I didn't. That was 11:16 a.m. And I said, something's wrong with NQ, right? And I almost never comment on NQ. And then I posted the picture right above, and I said, something's really wrong here, right? And that was a sign of caution for the members in the room, right? Was something's wrong here. Now, look how the zones perform from there. When you look at the market preview, I'll say that 37, for the day, the 32 to 30 was my highest odds location that I wanted to trade, right? So you'll notice we backside test the opening print, get a beautiful rotation out of it, right? Come into resistance, roll down, and we come right into this 2 ticks. Actually, we come right to the 24 30 75, and we rotate from 30 75 back to 34, right? Again, if you look at the time, you'll already know that this can be nothing but a scalp, right? That's 12:20. I'm going to show you what's going on here because it shouldn't have been a shock. You should have noticed, hey, something's really, really off here, right? Because as you'll see, I'm going to go off chart now. That's 12:30, right? So at 12:30 in the afternoon, we've just tested the white zone, and this is a straight annihilation of NQ. Everyone's hitting the door. When Bitcoin breaks down, so great analogy, right? When Bitcoin finally breaks down, it will look like this. Everyone will try to hit the door at the same time, and there'll be no bid on the market. This is really carnage, particularly for people who've been bullish on NQ and have gotten used to being able to buy any dip and getting large counter rotations. They really got annihilated on Friday, right? And for those of you who said, I'm sure there's a few people short, but look, that's coming off of an all-time high, and there's just not many hands, particularly retail hands, that recognize this rollover. And I know for a fact people got really, really hurt on NQ and retail accounts, large and small accounts, got really hurt trying to catch a falling stick of C4. Basically, this just kept blowing people up, right? So if you'll go back to the preview, right, which I'm going to keep connecting. I said this 3230 gives you the rotation. This is the second time in. You're recognizing there's a problem. And the first thing I said was the backside test of 3032 now. Notice the zone still held. 2625 gives a rotation up to 3032, right? And remember, I published these zones. See the 12th? 12th's already published, right? So this backside test, and I know at least one member in the room took a beautiful short out of that 24.2975. I moved that. I didn't mean to do that. And you can see it was that. And then I looked, and what were the pieces that we put together? And I said, look, we're below the white zone. Sellers are in charge. NQ's falling apart. Be really cautious on these zones below, right? But you can see at each step, even with the accuracy of the zones, we get a rotation. We get a rotation off of this zone. This was the only zone, 2417 to 2415, we adjusted. And I said, if you take the 2417, 2415 zone, you're going, push towards the back of the zone. This is back to the scene of the crime of the original breakout. Okay, again, a lot of nuance going on in here, guys. This is not easy to absorb at one shot, but again, this is mostly for the benefit of the members in the room. Anyone who would like to join the room, I offer anyone who's tried it for the first time a 5-day pass, and it's only $95 a month, by the way, to join the room. So this is really an edge. This is really an edge you can't get. This is really an edge you cannot get elsewhere. I know for a fact other people don't go into this detail. So if we look all the way across, right? This is Technical Analysis 101. You don't need me to know this, right? This is the breakout and the scene of the crime from the original rally up all the way back at the beginning of June. We gapped, we consolidated for an hour, we got above, and then we went into trend day up, right? You'll notice on this date, after the break, there was never a 50-60 retrace. It's always the first sign of the death of a trend day up is a 50-60 retrace, right? So you'll notice we came back, and I said, if you're going to come back, come all the way back to the base, 1550, and I said, make the adjustment. Use a 5-point stop, cut trade size. That's good location. Why is that good location? Because if you look on a TPO or a volume profile, you're going to see a big chunk of volume sitting at 12 that we never got to. That's still my key support area. That 10-12 area is a key area. And I wrote, critical area, retest of break, single prints, scene of crime. That was still there, right? You can see that I had written that originally when the day had started, right? And I said, you've got to give room all the way back to the 1210 because I wasn't sure whether it was the 1715, the 1375, or the 1210 that would hold it here. And if you also look, the voice is accelerating. I get excited about this stuff, guys. So let's go back into a Zen mode for a second here. If you look, what's going on? The size of the bars are getting bigger and bigger, and all of a sudden, we're getting a lack of rotation. So it's not going to do you any good to take the trade here. If you're going to take the trade and you're only going to use a 2-point stop, you're just going to get tagged out. And you have to know that going into that trade, right? Also, the other shift that you'll notice is notice that tick went dramatically negative starting at 11:30 in the morning, right? And we finally hit the most extreme negative tick of the day at the low. If you also pull up a volume by time bar, this down bar was the highest volume bar of the day. Now, here's the last piece. And you'll see me tweeting this repeatedly over and over in coaching, besides meditating that I encourage people in to slow your mind down, keep very focused. Don't get bearish in the hole. Why? Because we bounced from 24.12 all the way, not quite to 24.30, but 24.29. That is a 17-point rotation up. And I assure you, once you get emotional about your trade, once you think you know that the market's just going to completely crash, right, that you can make a mistake. You can short anywhere in here, anywhere after 1 o'clock. It was very unlikely that you made money unless you perfectly nailed this location. There was ways to perfectly nail this location, by the way. But you got to perfectly nail it. And if you were betting on the rotation lower, it pushed right up on you. It pushed right up on you. And you really, unless you were wise enough to scale that, it's unlikely you survived at all, quite frankly. So, at any rate, again, the key takeaways for the day, and I want to keep this very focused so everyone understands, right? This 24.30.32 was key because it was a HVN on a TPO. It was a high volume node on a volume profile. It was just a key area. It was the prior day's volume point of control. It was the area I most wanted to get long early in the morning. It provided a fantastic trade location for 2 points, which is usually my goal through the course of the day, right? We identified early on that something was wrong with NQ, particularly when we broke the low of the day, the first hour low, right? That those were flashing red lights. You had to have presence within your trading room, right? Meaning your screens. You have to have presence to understand what the hell's going on around you and in other markets to a degree, right? I don't believe in market correlations, but that's a dramatic difference. That's day and night, right? This is, hey, everything's sunny. This is, it's raining ash and fire from the sky, right? There's two very different pictures going on here. And part of developing as a trader is understanding what's going on. Secondly, you'll notice an expansion in the size of the 5-minute bars and the number of negative red bars. This should have tipped you off that there was an issue. Getting below the white zone should have tipped you off that there was an issue. and then the Armageddon that was going on in NQ. And again, I know people try to bottom fish this 100 down, and you can see when we got towards the lows, this last drop here, I don't know how any retail trader could survive this bar. This is one 5-minute bar that went from 57.30 down to 56.80, and I watched it in real time. It was an illiquid move. If you put a stop in, odds are you got stopped here or here, one of the two. The stops simply were not filling. There was literally one contract per level or no contracts in some cases. This stop, so you understand what you're dealing with, from 57.30 to 56.80, that's $1,000. Is that right? 30, 50 times 20. It's $1,000 a contract in this one 5-minute move right here. This is horrendous pain. This is horrendous pain. For a retail trader. And I hope no one listening to this got caught, would be my sincere hope. I don't usually trade NQ, but this is enormous and something that you need to be aware of and be prepared for, right? So I will go ahead and say for coming into Monday, key location for me is 31 to 34 is really my bull bear line. If we don't get over 31 to 34 coming into the day, I think we're probably going to have further to push. NQ was very bearish. The caveat for the day and the important piece for the day is that the question is, was this a one-day wonder that was only related to the NASDAQ 100 and what I would call a botched futures rollover, right? Or was it the beginning of a larger move to the downside? And we won't have those answers just yet. As I speak right now, NQ is trading down 1.5 points. It's had a high of 57.50.5, and we'll just have to see what they decide to do with it from here. Anyways, I hope everyone has a wonderful day. Tomorrow, protect your capital. It's the most valuable thing. Take the time to learn the markets. It can be learned, and you can be consistent. You can move from being an inconsistent trader to being a consistent trader, and you can do so relatively easily. Okay, guys, have a great night. I will talk to y'all later. This is Simon with Trade and Perform Coaching. Oh, you know what? I'm going to have to insert the disclaimer at the beginning here.